All right, we are live and actual. Welcome back, everybody. Sorry we got a little bit of a late start. We had a couple of difficulties. Typical. YouTube's been giving me fits lately, but I'm figuring it out. I've just got to get with the technologically inclined crowd a little bit more. So we've had a lot going on in the market this week, but now we're kind of hitting a standstill almost for waiting for FOMC here coming up at noon. That's going to be interesting. Wonder if the Fed's going to pivot. What do you think?
Well, it's not FOMC, so it's Powell just giving a talk. But, with all that's been going on with rates making yearly highs, my guess is he's going to make a comment. My sense is, all these Fed heads are coming out and they're saying that the higher rates have done our job. I think he'll reiterate that. My thinking is no more increases this year. But we will see.
I would love to hear him say the words, "We plan to taper these off just a little bit," but yeah, I think they're probably going to pull that card out next year. They've got a lot of cash to put aside first, I suppose, with the keeping the rates where they're at, just to make sure we can keep inflation in control. Hopefully, they don't dance on us too much. I can see kind of range, and I'm looking at at SPY here, the S&P. We've got this. I mean, this cup and handle couldn't be more textbook. It is just gloriously built, right? We got the handle here. We're in this wedge, and this is a descending channel, just like any other that I've drawn. And I've got thousands of them on every chart I look at. But this one's a little keen, and it can do one of two things today when JPOW takes the mic. So we're at regression here right now. We can run. Like if he starts talking bearish, it rips down here, and then towards the end of his speech, he starts saying some things that make people happy. Well, right back here, possibly outside of this channel. One way or another, we've got a scenario where if we fail to reverse down here, we can start revisiting all of this structure back here on our daily chart. We can start hitting these consolidation points and being bearish for a while. It can happen. We can fail to break out of a cup and handle. Typically, that pattern, I think, according to statistics, is was it 71.6% success rate? That leaves like almost a 30% failure rate, so it can. And we're right in that point where it's critical. So chances are we can start to melt up out of this and start pushing the S&P or SPY at least up into the 500s, but that's going to take some work, and I think the Fed influence is going to have a lot to do with it. And since we are where we are in this cup and handle, the handle part, I think today could make a significant difference in what the outcome of this pattern is going to be.
I think it will. We just put out our ETF model portfolio update, and number one thing we're focused on is the Fed. Number two, don't forget Mag 7 earnings. We just had Netflix and Tesla, but the more important ones, in my opinion, are coming up. And take them out of the S&P 500, and the remaining stocks are forecast to have negative earnings growth,
Right.
and they're like 80-90% of the return this year, so that'll be important too.
So we're looking for some potential bearishness then. I know that Netflix and Tesla were completely inverse of each other yesterday, and let's break into that real quick. Tesla, I had on kind of a radar. I was looking, well, it'll either rip to 290 or it'll go right back to support, and it certainly did the latter. It went right back to support. I'm looking to be interested in around 215 or so. I think we could continue this short to about there, and then maybe we'll get a reversal around that level and start to eke back out. And then it just kind of redraws the previous measured move we had. You notice my boxes have shifted. So it used to be up here to extend. I always tell our members to like write on a post-it note, half and whole, and just stick it to the edge of their monitor, because oftentimes once you plot these things out, they'll either return to half, or sometimes they'll only make a move of half of the expected move and then turn over. Well, this outcome of move number 2 into move number 3 only hit about half of move number 3 and then rejected and came back down. So I went ahead and moved that box over. I'll use the same box, drop it over to about half of the previous box, and that is our bear target. Pretty simple, right? So if we go and return, retracement on this thing would be to a previous analyst target here, about 251, 252. So that's kind of in the range of about half of our box to return up to resistance. So if things start looking better after this mess of Tesla's earnings announcement, we could see a reversal here. So kind of watch this area here. If you're already short, congrats, you made a killing, doing great. You can probably hold a little longer. Just be cautious when it hits the bottom of that box, because that's where I would take profit on a short. As for Netflix, this is more interesting.
I actually just shorted it in my personal account when it broke below the 50-day for like the fourth time today.
Don't you love that? It's so easy.
Well, we'll see.
I know a guy personally who like lives to short Netflix, quite literally, and it's all he trades. I kind of look at it like this. I mean, I didn't draw the boxes for this one. This one I used some fan lines and some basic structure here, but you got a pretty clean measured move here. You got your primary and your secondary on a weekly, and you got half of the third move kind of done daily, not weekly. Break into the 2 hour, and there was something a little more interesting here. So this is our primary. It was quite parabolic. It slammed down. This is where about the midpoint of our expected consolidation was. That's a support area that we've known from back here. Looking left, we saw the bull target pretty easily, right? Yesterday, it went right up to the previous high. This is a wolf wave here that I've built from a long time ago. Wolf waves are interesting. Read about them. Essentially, came up right through that, went to the previous high in yesterday's earnings call, and then continued to run right up to that retracement line right in here. And that's a damn good short if it's rejecting it, and it certainly did. We were watching the opening this morning. We were expecting this to bounce off that line, run right back to support between our two measured move target boxes, and if it was going to exceed outside of this 50% retracement and get into this measured move, primary, secondary here, we were expecting to maybe swing trade long on this, but now we're looking at this. Okay, it's rejected. It went to about half the box, rejected, and came back down. So now it's a good short. Short-term targets, I've got down here at about 394, maybe even an extension down to like 392.50-ish. This is a previous analyst target in purple here at about 384. If it fails to breach this retracement line, it can certainly continue down that path and hit that analyst target. And if it starts to eat down about half of this trend here from that earnings call, which was a massive boost, we can literally just strike a line about halfway through this move and find a retracement target. So about 370-ish or so. So you can certainly ride momentum.
That would be awesome. I'd be happy
right?
with low of the day, but I'll take in the 370s.
That'll make you dance if it hit that level. I always say, like, when we've got long-term targets and we're riding momentum, knowing where those targets are is going to be clutch. And you can either let your winners run, or exactly where you can expect consolidation and support or possible reversals. So if the trade kicks you out, you'll know where. It's pretty easy to plot those targets. And, we always say it's not about what you trade, it's about how you trade it. And that's exactly an example there. It's a matter of a lot of people chase these earnings up. Man, there was just all kinds of liquidity in after hours in that move, but they hit a wall somewhere, and that's where that wall was. We knew exactly where to look for it. So now coming back to the downside, we can just go and retrace previous elements within that wall, so to speak. So pretty fun stuff. Yeah, I definitely agree with taking a short on this. It was a pretty good entry this morning.
So far, so good.
Right on. All right, what are we looking at next? I got to pull up the Cramer list here. And I got to say, since we got a moment, this list is kind of short this morning. I guess Cramer's on vacation. So
he's been out all week.
We can drag him into the ring and slap him around a little bit, but we can't beat up on him too much behind his back while he's out there, enjoying the world and stuff. But I gotta say, my heart and his heart are kind of in the same place. He just wants to help. We kind of always know that, yes, the road to failure is paved with the best intentions. The road to success is pretty much paved with good works. Um, there's a fine line between his analysis style and my analysis style, and you're either on one side or the other. I'm purely a technical analyst. I look at charts and pretty much ignore most other things, but it's important um, for yourself if depending on your term of time you want to be in the market or in any particular position. I'm very short term typically. I can plot the long term targets and ride momentum, take swings in between all of the pullbacks and all that stuff. That's my style. That may not work for everybody. So finding that fine line between a guy like Cramer and a guy like myself, we just want to help, but one thing's going to work out better in the short term, and that's going to be technical analysis. Medium term and long term can play out with it as well. But I like to look at things with a lot more scrutiny. I don't just go, hey man, everybody's buying this, let's chase it higher. Kramer tends to do that a lot, and it's picking up on
More than a lot, yes.
it's more than picking up on fundamentals and stuff like that. A guy and I, when we used to moderate together with the bullish bears, he would say fundamentals, because if you're just following fundamentals and you're not paying attention to price action, chances are you're going to be a little frustrated, and that's where chasing some of those top ticks that Cramer calls out will become very frustrating for the average investor, let alone the average trader. But if you're just able to take a list of things that the guy's looking at, go and do some technical analysis to it, let the chart speak to you. And once you get used to even the basics of price action, that chart's going to tell you a lot about what you are expecting from that particular equity versus what Cramer might be expecting from that particular equity. We call it doing your own diligence, and that's absolutely the fundamental that I stick to, is learn a little bit about what you're looking at, what you're doing at least, and then make your decisions. Don't go and base them on what other people are saying. We say that all the time. Don't go chasing the analysts. Whenever you hear an analyst say anything, take a very good, hard, speculative look or scrutinous look at what the chart's telling you about that stock. So that's what we do here. We try to help you learn how to do that. And that's all we could ever hope to do, is to teach people how to do their own technical analysis. That's where I'm at. So as much as we like to beat Jim Cramer up a little bit, every once in a while he calls out a good call, and it was 50-50 for a little while there. Once my friend Matthew Tuttle here put a little pressure on him with that beautiful SJIM ETF. Things kind of changed for a moment there. It was under some scrutiny, and then now he's kind of tapered back into his comfort zone again, and he's
he went back into his comfort zone when the AI stocks started ripping after Nvidia's earnings, but
yeah,
he's back to his old ways past
yeah.
couple of months.
So if nothing else, I think what our job will be to do is to keep the guy on his toes. Maybe he watches us, maybe he doesn't. I've got some mixed information that he might have seen what we're doing here. I understand if he did, he probably at least respects what we're doing here. And if he is watching, I would love to talk to him. Just go over.
I would too.
Heck, maybe we'll end up working together. That'd be awesome. I would love that. I think we would have probably a very entertaining get together if you, Jim Cramer, and myself got together and just laid it out there. That would be pretty awesome.
I offered to donate profits from SJIM to his charitable trust, but never heard back.
Oh, I wonder if that would have some weight if he did pick this up. We'll have to see. And again, we'd be pretty much up against the executives over there at CNBC anyways, and who knows what those guys are going to think.
Yeah.
Anyway, moving on, we still got some stuff to look at in the list here. Let's go down on the march here, so to speak. There was a change in price targets here. Let me see here. Stanley lowers its price target from 380 to 380 from 400 on Tesla. So let's see here. They've gone back to a previous target. Imagine that. We've kind of already known that with Tesla here. I was looking at Netflix when I said that. I haven't even marked the dang thing. Cool. Well, let's just stick a analyst target on there at 380 and move on from Tesla finally here.
I like Kathy Wood's target. I think it's what, 2000?
Yeah, something like that, right? Good Lord. Um, as much as I would love to drag her in the ring and ask her what the heck she's doing, she might not be as nice to us as Cramer. You know, she might
Yeah, they don't like me very much over there.
they might send us a cease and desist letter pretty quickly if we started going after that one. I bet.
I have gotten one from them.
Oh wow. Okay, now I'm digging too deep, aren't I? But at any rate, you know, I mean, business is business. I get it, you know, and if you're having too much shade thrown at you, I guess you can have some merits to throw that kind of thing out there and say, "Hey, stop this! You're really starting to annoy me." But look at what history teaches us about that particular person whose name I will not mention. Well, I'll mention it. We already said it, Kathy Woods. Um, I mean, she's about as speculative as can be on some of this stuff. And half the time I wonder if she's kind of trying to just kind of follow the crowd and just listening to the analysts and going that route. Does she do any of her own stuff? Who knows? But
They have their own analysts, and their analysts have ideas that are different than other buy side analysts, let's say.
gotcha, gotcha. I mean, I've known a few fund managers over the years, and there's some really good ones, and then there's some guys that end up let's just say changing jobs or changing career outlooks. So it happens. That's just how, well, that's the nature of the beast anyway. Either you're good at trading or you're not. But one way or another, you got to have some sort of edge. And that's where learning how to do some technical analysis will really serve you well. Because I often wonder, I'm like looking at some of the charts that they're trading, and I'm just like, why the hell would they belong here? What is going on? And that's just it. Having that ability to say that to yourself or to others, that's all you need to know. The chart doesn't lie. You know, what you're seeing is in real time. But at any rate, another thing I did want to point out real quick to Tesla is, you know, we knew where that channel was. We knew where that 50% retracement was. We knew there was strong liquidity, strong sellers up here, and it went right to it and backed off, of course. Now we're at or close to that bottom quarter or that 207 target. So having a 380 target long term, I mean, that puts us right back in range with previous highs. Bringing that down from 400, I mean, that was a top tick analyst call. Let's just say it. I mean, it melted down the moment they said that, I'm sure. Problem, um, when we come into a halfway point between an analyst target and a floor, we start to see consolidation, and then we end up with a breakout one way or another. So if we start to see this melt down and break this support level, sure, we can trade it all through this structure. All these pivots are here. They're known. They're easy to trade to. And we just wait for a reversal and stop our short position and consider a long position. Pretty simple. You know, price action is going to do what it does, regardless of fundamental analysis. Okay, moving on. We got a little chirp about, or a little chatter about LVS, Las Vegas Sands. Is that a short for you?
So actually, I just, before we got on the call, I just went long. So what I saw is it undercut the 10-day moving average and then crossed back above. So, I mean, not a big position because overall well, actually the market's coming back a bit. But it was something I was looking at off the open and then immediately just started to crumble, so I didn't buy it. But then when we had the undercut and rally, I did. So we'll see. And and my stop is the 10-day.
It's at a good point for entering a setup. So, I mean, it's had this nice, one for one down. It's in this descending channel that's bound to have at least a good pullback here. I always subdivide these when I see this. And then we can set up some other targets. So when I'm looking at this sort of thing, this is coming out of a diamond pattern. If you guys have ever even heard of me, you know I love these diamond patterns. They do a lot for me. this is the point where I'd be looking for a reversal. And just live this morning with day trading SPY from a diamond on a 5-second chart, we saw these and played out perfectly. I mean, it's just easy. Right here is a good point to be looking for a long. And as soon as it goes, it'll likely close this gap very quickly on the daily chart, and you'll be in a good spot. But if it rejects this line, you can always change your mind. If you cut your losses quick and let your winners ride a little long, that works good. That's a good place to be. So, I mean, if it's going to break that 10 period, I use the 8 period. Same thing. It's above the 8 period today. 2-hour chart would tell me likely to continue. And I can agree with the being in the long position. Typically, I would wait a little later for a breakout before I went long, but I wouldn't argue with the long position here. This is looking fairly strong so far. Especially if you got the bottom of this wick or somewhere about, probably right around the 45.70 area, 45.75 be good enough. Pretty good play. Man after my own heart. As for targets, we got angular resistance here in the channel. We could see this thing shoot 47.80, $48 is pretty reasonable. I almost wonder if there's mention of any of the major analysts putting a different price target on it. I didn't see one. Fair enough. The only thing that concerns me a little bit with this kind of equity being that it's, going to have a lot to do with disposable income. I almost wonder if maybe if these rates do start to relax a little bit coming up here, that we'll start to have some more people with, in the market, or consumers with disposable income. They can start going and enjoying themselves, taking advantage of some of these resorts, and maybe even throwing some dice, or playing some cards or something. Maybe bringing some equity back into Las Vegas Sands. And it's at a point where it could go either way. It's looking like it could make a nice bullish retracement and have a couple targets ahead. Yeah, I can't argue with a long position here. It's looking fair. The other one we're looking at is Win, and that's on the list as well. That one I'm not so sure about a reversal yet, if I'm being honest. And
yeah, no, I mean, I've got Win on my watch list too. There's just nothing of interest to me at the moment, and I think they've got. All right, they don't have earnings for a little while.
yeah, they were just out in August 9th there, it looks like. So it's paid to move down. It's at a critical support area. It could get a little blip of green, but I wouldn't take a long-term position in this thing until it started to show me some signs of a change in trend here and start running back towards $98 or so. Yeah, nothing too interesting for me on that one yet either. I think I'll wait and see. I always put that half and whole thing out there. At one point, we had the primary move set up. We drew it. We got the secondary move up here. We got an analyst target up here at 138. That's a bit of a stretch from where we are now, obviously. But I'm looking at kind of the half and whole rule here, and we're looking like we'll probably go a little further down, probably about 81 to 80, somewhere in that neighborhood. If we start to make that move, it could be a good short-term short, and then hit that half mark and possibly melt back through to resistance here. Definitely keep it on the watch list, keep it on the radar. It might give you a quick short in the near future here, but certainly keep an eye on that one. When you start seeing one of those resort stocks start to turn around, they usually kind of tend to follow each other. Some will lag others. It does happen. They run in the same circle, basically.
Yep.
Disney again. Did you send Jim the ears yet?
Not yet.
We'll get there. I wonder if we could get him to wear them on the ear. That'd be hilarious. Maybe that would be the outcome of if we did get together and start doing some broadcasting. That'd be awesome. I'd love that. That'd make my day. Looking at Disney, man, I'm still a bear. We could see some quick retracement to that previous 88 target from one analyst or another, but I don't think it's going to be hitting 110 anytime soon here. This is just, I mean, that's a roaring, screaming bear flag right there, and it has broken support. It has begun the trend down in that channel. Diamond's pretty strong indicator of where our targets are. Do you think you want to still be short in that with the portfolio, or you want to hang on and wait for a signal to get short on that?
Yeah, I mean, we are short in SJIM. I'm not short on it personally. Um, yeah, I was actually long, not this week. I think we probably got
Oops,
out of our long last week personally.
I deleted the wrong line. I'll just draw it again. I'm looking for short-term targets to kind of split this channel. If it starts to crack through that $80.50 line again, I might take a decent short on it. And actually, there's a little pennant right here too. So if it starts to fail support here, it might be a very quick short from about 83.50 to about 80.50. So get a couple bucks out of that. In the meantime, I don't see it hitting 88 anytime soon. It's looking like it's going to remain bearish for a little while. And the rumor mill's still churning about being bought out by whoever it was. um, yeah, man, I'm pretty much still a bear on Disney. That bear flag is just, it stands out. It speaks to me. In the meantime, let's see what Jim said about it. Oh, filed an 8K. Yeah. Okay. Nothing really said much about it. I mean, there's main takeaway is that ESPN is doing much better than what most anticipated. Yeah, okay. Um, Other than that, I mean, it's kind of in limbo. I think they just need to get their house in order before they can start really getting back into the habit of making money. That's just Disney, doing Disney stuff. It's like Goofy's at the helm. uh, Looking at a couple other mentions here, you got into Costco a little bit. Let's see here. Successful.
Yeah, it's looking like a double top short to me.
Let's have a look at it. It's kind of reading. There was some stuff with the CEO on there, but big whoop. Yeah, dude, nice double top. Um, we've been drawing a lot on Costco, and this one I didn't see any measure move setup, so I didn't draw them. But we got lots of channel swings, and that's kind of the way it works. Sometimes my charting analysis style will change from equity to equity. If I don't see a structure that's common in it, I'll look for a structure that's common in it. I'm going to delete some of this and clean this up. But looking at a known liquidity zone is pretty obvious right here. I might even adjust that a little bit later. But I'm looking at double top on the weekly. The daily looks like we've got that wedge that's get just above that previous high. If it can't find support here, sure, it'll melt down and test the regression. I might join you on that short. That looks like a good swing trade.
I don't, there are other things I'd rather short. I'm
Sure.
shorting regional banks at the moment, but it looks like a short to me. And we're short Costco and SJIM, which
I,
I own personally. So
I'd look for probably a short return to about 560 or so. It'd be a good target. Got to melt this liquidity zone first, though. Trade would be from like 568 down to like 560. So quick little $8 swing. I might throw some debit spreads at that myself, just kind of looking at it. But the other thing about Costco, man, they've been pretty good at making money in spite of the volatility in the market space as well. I mean, COVID and everything. I think we're pretty much over
and they
that stuff.
make plenty from me.
Yeah, man, I'm there at least twice a week. Um, can't pass up the cafeteria either, and I know that's a a drain for them, but they maintain that respect to their customers. That you should be able to have a hot dog and a soda for $1.50. I like that. Great business model. I'll be there for hot dogs, and then I'll buy them in bulk out of their freezer anyway. So, um, this could end up setting up a measured move here, though. So, if it can't quite hit that 560 target, and it just makes about half a move, maybe like 562 or so, it might signal a long later on. They got earnings coming up or anything? Let me see. Yeah, out here, scheduled for December 14th.
Oh yeah, not for a while.
Yeah, I think we can kind of keep that on the radar. I like short term. Short would be in order. Medium term, long term stuff that might consolidate and start to move back up a bit. You can see today's price action is right in that liquidity zone, and we could see a quick measured move down. 560, 565 ish would be a good bear target. I'll wait and see. I might take a very short-term swing, like a couple nights, holding some debit spreads on that, and then I'd love to see it hit that support and bounce and start melting up towards its earnings, but we'll see. It's not a stock I like to trade all that much anyway because it just has a fairly low risk to reward ratio, in my opinion, for options trades, but sometimes it's worth a swing, park some cash there and see what happens.
Yeah, not my favorite to trade either.
Yeah, it's just doesn't have a regular beat. It doesn't have simple moves. They're very complex. There's a lot of stuff moving in Costco, so too many moving parts. Let's see here. Morgan Stanley shares, huh? He didn't list the ticker in this one. This is weird. Item number 8 on the list. I'm gonna look at Morgan Stanley anyway.
Looks
Hey.
like death.
Yeah, dude, I love that. It just snapped a critical support. It's outside of that channel. Let's see where we at. There we are. Below regression. Yeah, dude, that looks bearish as I'll get at. I like shorting that big bank. Looking like we got the primary and secondary set up. This is an easy draw. There's your primary. There's your accumulation. Your expected target. Well, just draw another box. Let's find the number. That could be bearish all the way down to like 69 bucks. Halfway point would be about 71, 72 in that area. That looks like a beautiful bear flag to short. I like it. Cool. I guess they had an earnings snafu, and that's kind of what.
Yeah, they had earnings, I think, yesterday or the day before.
Doesn't show up.
Oh, no, it looks from the chart like it was yesterday.
Yeah. Definitely some good news bears. I like it.
Yeah.
In the short term, the daily here, we've already made a primary and secondary move, so I'd love to see it snap to support and go for the reach to the lower zone. Cool. Good short. Thanks, Jim. Looking at, and I'll give him praise on that one. It's he seems to be a bit bearish on that too, so I kind of like the idea. Crowdsource and what's this ZS stock? What was that?
Zscaler.
Oh yeah.
Yeah, those both have been pretty strong. Someone, I think it was Jeffries, actually came out and upgraded both of these.
Sweet. We drew this a while back.
They've retraced a lot of their initial gains with the rest of the market.
We were talking about this recently because I've got some dope on the chart from it. Previous analyst.
I might actually go long Zscaler just into Powell. I don't know that I'd hold on to it more than a day, but
right. I think the last time we talked here, I was noting this primary move and the secondary move came out. It's hit about the halfway point of that, and I always say make that note, half and whole. I'm going to borrow this pivot and drag it down to the next control area. That's where we're at, top of this big old bar here. If you're already long, heck yeah, you did great. You can kind of take this as a pivot point, and about 170 would be kind of the line in the sand. If it can hold above 170, you can stay long and finish the move up to, about 197, 198. If this starts to reject and break below 170, though, you might consider taking profit on that long. But that's looking pretty good for a long. I like that one.
Yeah, I actually just bought some.
Nice.
You talked me into it.
I think I just heard your push notification go through on that. Looking at the monthly chart, sometimes I do. Very nice descending channel. It's got an upper reach target all the way back here at the halfway point. Good Lord, about 235. Oh, man, that makes me excited. Nice little head and shoulders, if you want to call it that. You know, you got your left shoulder, broke below the previous support a little bit, made a new head down here, so to speak. Pullback's been done. That could be a great long. I kind of like that one. I might follow you with that.
Yeah, I mean, we'll see. Again, I don't know that I'm going to hold it overnight, but I do have a feeling that Powell is going to give the Bulls a little something. And the market certainly seems to be coming off the bottom into that meeting,
It's kind of setting
which
up,
I actually don't like because I'm not the only one thinking Powell's going to give the Bulls something.
right? Yeah, there's going to be a lot of people chasing that. And I was looking at the analysis earlier on SPY. It can either rip down and hit the support and bounce out, or it can go and shoot the top of that and melt down afterwards. And that's where things get a little worrisome for long term. So far, this is looking like the textbook measured move. It's hit the halfway point though, so just be a little leery of maybe it'll pull back here, maybe it won't. I like it. Good stuff. The other one that was mentioned, crowdsource, CRWD. I haven't put really anything
Same
on
type
this.
of deal.
Yeah, looking like it. Got the primary, the secondary. This is a 2-for-1 already done though, so I'm kind of a little short term. I might see a pullback here, but well, let's draw this one. Sometimes I hit the wrong button. And hopefully, I'm not boring the crowd out there too much with my drawing and taking the time to do so live here. I don't mind doing it, but I know sometimes it looks like a little dead air. I gotta think out loud while I do it though.
Mhm.
So yeah, it's exceeded the halfway point. We could see it push a little higher to about 202. Certainly looks like it'll continue doing that on the weekly chart. The daily chart set up for it. There's your accumulation. I think we could see the push. Cool. I didn't get long on this one yet, but I think if you are already long, you'd be doing very well to hang on for a little while there. Um, Key area, just look for, if it holds like 186 and continues higher, cool. Starts to crack that level though, maybe consider profit if you got long down here. Cool, same kind of thing. That's 2 for Jim Cramer, or 3. Ah, who's keeping track?
Yeah.
Good stuff. We'll give him praise where credit, and praise where credit and praise are due. Couple others we're looking at here, and this is kind of getting to the bottom of this list. This is item number 10 here. I was looking at Starbucks, Chipotle, and Domino's. I've had a couple of great trades on Domino's, but it's never really been all that interesting of a trade, other than I've shorted it a few times. But let me look at Chipotle first here. Let's see, CMG.
Yeah, we're short in SJIM, but I actually do like the way Chipotle looks here.
Yeah, it did what we're kind of looking at with the same chart as Tesla there. We got the 1.5 up, return to mean, break below, tested support. Looking to fill this gap here. Probably hit us up at about 1920 or so. Just got to break above the 1860 area, and it could be on 1870 maybe. Um, let's look a little shorter here about the 2-hour chart. There we go. Now we got some stuff. This is one of those equities where the share price is kind of high, so it takes a bit of money to move it. We've made our retracement 50% here. If it breaks above 1870, I'd say continue long. Definitely looks good. It could reject around there though, so be careful if you're already long. Kind of look for a resistance area around there. That's Chipotle, man. That's an incredible story from top to bottom here, or bottom to top, so to speak.
Yep.
I mean, I remember when that thing was way down there. There it was about 2017 when I started trading. I haven't been trading all that long. I was looking at it then, and I thought, my first starting out account size wasn't big enough to really do much with it, so I'd take a few share trades on it and swing trade it and stuff. It was a great swing trading stock, and then it just ran away, and there was no catching it. Could have had a chance to get back into it around March of 2020. We all know what happened there. We got the all that fun. Got it broken down. Got a bargain deal here at around 420, 430. But I never really had a whole lot of interest in trading in it around that point. I just kind of lost interest. I went for the REITs and did very well in the REITs. I was doing some wheel trading on a lot of the real estate trusts that got beat the heck down. The only thing I regret about that is waiting for the tax forms to come back. They always come back at the last minute, and you got to dang near wait till like, April 10th to file by the time you get all those things, those K1 forms. Um,
Mhm.
so, be careful trading some of those things if you ever get into that. It kind of upset my ability to file taxes early, let's just say that. But, I ended up going and revising twice. Wasn't expecting those to come so late, but at any rate, that was some good trading back then for me. And then I got into and out of a lot of those positions, and now I'm kind of looking at real estate with a grain of salt these days. And if the Fed just keeps hiking that rate anymore, I mean, the interest rates on mortgages hit 8% the other day, and that was not a shock to the market, but it's certainly not doing it any good. Um,
Now I got to figure that's going to be a big problem.
Yeah, I mean, there's going to be a liquidity issue with inventory. I mean, there's going to be a lot of people who were smart and refied back in 2020, 2021. They're not going to go and refi now, and they're certainly not going to want to sell their house because they have to go find some place to live. And changing from a 3 to 4% interest rate to an 8% interest rate is certainly not appealing. I know I'm not
No.
going to sell. I'm not going anywhere. Um, Looking at the housing market, and some of the areas where there's been a lot of migration to are starting to taper off. Well, have started to taper off early in the year, and are starting to come back down to reasonable prices. But that interest rate is still not going to make a lot of people any interest in that. I'm still waiting for that other shoe to drop, and I think if we get a major pullback in the real estate market, certainly the Fed would try to act and get the rates lower to help move some stuff. But stagnation in that area is not good for anybody. So buyers or sellers, I think we're going to start to struggle and maybe see a tipping point in the chart for real estate pretty quick here. Looking at Chipotle one more time, just real quick. 2,300 was a previous analyst target. Dang. And I think I remember when I drew this, I was doubting the crap out of that. I was like, no,
Mhm.
ain't going to happen. And it certainly did exactly what Tesla did. It went to the 1.5 measured move and then fell back down. But it's looking good for a little while here. I think we got to kind of wrap a little briefly here. We got about 10 minutes till old J-Pow hits the mic. And got time for Starbucks and Domino's real quick, and then we'll kind of wrap it up. Let's look at Starbucks. I had a hellacious short on Starbucks, but I think I'm done with that now, and we could see it start to give us a long signal. What are you thinking?
Starbucks. We don't have a position in SJIM, but yeah, I mean, I could see it as a long here.
It's kind of made that move. It's hit that 50% retracement of this guy here. And before I was looking at this as the primary, I was looking down here for bear target. I took my profit back in here. As soon as I saw a flicker of green around, the beginning of October here, I was out. It took forever though because I got long a little bit early, or long on a short position or bearish position a little bit early on that. I ended up getting some back, but I went and compounded it and took it to where it needed to be. So I still made good profits on that move, but now it's like I might be inclined to go long on this thing. As soon as it can breach, this $95 range with some force here, I think, and it just peaked over 95 today. We could see some continuation and momentum take off in that thing and start taking it back to at least the top of the secondary move here. I would say we can probably shoot for like 96 to 98, somewhere in that neighborhood for a short-term bull target. A little higher later, maybe if it can exceed that range, we can go to like 98, maybe touch $100 again. But there's a lot going on in that company where things are starting to. The unionization didn't do it a lot of good in the near term, and then now they're kind of starting to reach that plateau, and we've seen this kind of happen in the automotive industry too. Things start to kind of flatten out and become not so exciting anymore when unions get involved. It's just how it is with equities. Short term, though, yeah, I think we could scalp it a little bit, but I don't know that I'd maintain much more of a long term in that other than just collecting a dividend if I was an investor. 53 cents a share, that's reasonable. I don't know. A short term, decent little scalp for a bull move, but I wouldn't
Yeah,
be.
I think they're better places to be, but
Yeah, definitely more exciting charts to move money for us. That's for sure.
yeah.
And then Domino's, I want to look at. I haven't looked at Domino's since I closed my last short position on it. That's been a while. Yikes. That is a tacky chart, dude. Am I in the right one? Yes, I am. uh, you get these gaps in this thing out of nowhere, and it's typically
Yeah.
an earnings call, and oftentimes it'll fill them later. And in this case, the last short position I had was looking to fill this gap and took a profit from that finally not too long ago here. But now I'm looking at it's hit that halfway mark. It's hit that move right to the basic target of shortness I had, breaking from 380 to 345. Good numbers. I could have held a little longer and went to the 335 or whatever. I'm okay. I had that all mapped out. It was in there. It's just not my most favorite stock to trade, but when it starts setting up these gaps, we start to see some very quick plays on that. Here we're at a point where we could take it either way. We could see another short leg down here to like 315, maybe even settle around 330. But I'm not going to be interested in it until I see some sort of momentum taking shape here. And it can also go back and run right back to the high here at 390. So um, I keep it on my watch list, but it's not something I enjoy trading too often. Every once in a while, I have a great little, like I said, gap fill short or sometimes a gap fill long on it. I've been known to do. But as far as cost effectiveness to trade, this is where it gets exciting. This is awesome if you're just learning how to trade debit spreads. You can have an incredible risk to reward on some of these. You run like a $2 to $5 wide spread on them. In this case, that gap entering like probably 90 or 45 to 90 days to expiration on debit spreads. I was running $5 wides for like two to 20 cents at a point where it would be in the money, running 20 cents risk and coming off with like $2.40 out of it. I mean, that's an incredible ratio. Really, really good.
Yeah.
But if you're wrong, that risk is so low. I mean, it's worth taking a shot at it. That's ridiculously low. Kind of knowing where those previous targets were, that it can take such a dramatic move. That's where those debit spreads can really pay off. And that's the only reason I really pay interest at all to this stock is because of those gaps. What sucks is that the spread on the volume or the volume on the options makes it so there's kind of a wide
Yeah, it's a
bid-ask
tough
spread.
stock to trade.
It is. So like you look at trading, most brokers won't even trade those options positions for less than a nickel. So like you're looking at a 5 cent risk per contract is pretty much the interval. So it's like 5 cents, 10 cents, 15 cents, 20 cents. Even on the $5 wide spreads, you're going to find that kind of falling in there. It's going to be rare to get anything outside of a 0 or a 5 on the second digit of your risk. So I'm looking at those. I'm always kind of like, okay, well, what are the chances that this is going to be in the money by the time it gets within 30 days or so from expiration? And that's why I look at these $5 wides on Domino's for any reason. And I was looking at this big old bull flag going, man, that looks like a bull flag to most people, but this gap is just, I mean, it's screaming at me, hey, short this if it fails. And certainly it was worth the squeeze. And having that 340 to 345 spread was just glorious. Got into them at 20 cents and walked away with damn good money. Not saying I would trade this all the time, but whenever I see this setup, I really love to grab those. So that's just my style.
Nice.
Take small risks for some potentially big returns, and I've certainly done that more successfully with like Tesla and Amazon and stuff like that. But Domino's is not one to ignore, and if you're a beginner at trading spreads, man, that thing can really pay you well. So just got to keep an eye on it. I think that's kind of a wrap. We've gone through the list. We used up our allotted time here. We're just about to go into J Powell's speech. You want to hang around? You want to just call it?
No, I've got to. I've got another podcast. I'm going to be on at noon. So
Perfect. We'll let you go.
unfortunately, I'm going to miss J Powell, but I'll be watching the charts.
Yeah, well, I'm going to go back and hang with the members of Bullish Bears and see if we can get a couple scalps out of J Powell. Off to
Good
SPY.
luck.
Thanks a lot, sir. We got it all mapped out. We're ready to roll. We'll see you later.
All
See you
right.
next week. Thanks for joining us, everybody. Remember to like, subscribe, hit the bell so you can get some notifications when we're live. Our schedule, we're sticking to Thursdays. Sometimes it'll be 11, sometimes it'll be 12. Apologize for the walk there, but we're going to expand and get some more viewership. And certainly like and subscribe and hit the bell on your personal YouTube channel there, if you want to plug that. I know you've got a lot of stuff that you talk about with your portfolio and SJIM and all that stuff going in there, and kind of walking through a lot of good analysis. And man after my own heart, we love that technical analysis, and you can get a lot more of it. Get more people
Cool.
involved. He's got his own. Thanks again, guys. We'll see you next week.
All right.